It's Wednesday. Roll over in the futures contract. You think we'll get any volatility off it? Hmm. I think we already have some volatility. We'll come up with some trading ideas regarding the CPI number. Hot or not is the high for the year, maybe, in an inflation. Hopefully so. Triple D, I don't know what he's going to rant about today, but I'm sure he'll find one or two for us. And Brentster is going to bring us a little education on maybe offerings or GTLB news. Folks, we're set on this Wednesday to bring you a great show. Pre-market prep start right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Looking at our charts brought to you by TradeStation, born to trade. Chart analyze, customize, all-in-one platform. Trade smart and move faster. Stay in control with the platform built for serious traders and traders that want to get AI into their portfolio. Getting started in the red here this morning. Well, we started out in the red last night, and we're down 72 handles, 73.22. Folks, good news. We're 70 handles off that low in the move from yesterday. The buck is trading just a few cents higher at 99.96, trying to clear that par level. TLT steady here ahead of the CPI number, down only a dime, 85.02. USO, well, it's getting a boost, and we all know why here. 233, 133.63, but off the high of the move still. That's some good news. Gold and silver taking it on the chin. You know what happens when you consolidate near the low or high of a move? You bust through. GLD down $10, 2.5% at 380.85. SLV, that's got a 5 handle on it. That's down to $1.66. That's almost 3% at 57.23. And Bitcoin, well, it's consolidating too here, down $985 is 61,185. Gonna bring to the stage the master of disaster, Triple D. We're getting some volatility.
Yes. And you called this, Joel. Like, we still blaming you for last Thursday when you were like, the market is topped, it's over. I think it was actually Friday. The market is topped, it's over. Sell your peanuts while the circus is in town, the whole shebang. And then we get the Monday and the Tuesday, and everybody's got hope. Oh, yeah. Here is the refluff. Here is the bounce back. Yeah. And then the rug pull yesterday, and it was violent, more violent than the Friday rug pull. So now we've got a trend. Now we have the bears out of hibernation. Now we have some. You smell it, Rabbit? Brentster. You smell something, Brentster?
Smells like fear.
That's what I smell too. I smell some fear out there for once in our lives. So let's go to yesterday's action because it was a crazy tape. They sold and they sold and they sold all morning. Could not stop selling until all of a sudden, we only V bottom here. They started to buy around noon. And then they bought more, and they bought more, and they bought more, and they had the most ridiculous rally, 120 points off the low. Crazy move. That was a gift last night. We were in the STN think tank. This is why people subscribe to the STN think tank. And I'm like, there's not a lot of pitches up the middle, but shorting this close is a pitch up the middle. Went short the close. I think we had some participants, obviously, in our think tank shorting the close and rewarded here. Finally, almost immediately last night, but definitely if you're still holding on here, rewarded for all of your shorts here this morning as the sell-off does continue. Reasons for the sell-off? Well, tech overbought, but the main catalyst from this morning is escalation on the war front. Can you update us there, Brentster?
Yeah, where did the tweet go? Let me pull up the tweet here. Give me just one sec. Sorry, the Trump truth. So this morning at, do we have a timestamp here? 7:03 a.m. Iran's military is a complete and total mess, much of it, and like their Navy and Air Force doesn't even exist anymore. They've been completely defeated. Iran is all talk and no action. The bully of the Middle East is dead. They've taken too long to negotiate a deal that would have been great for them. Now they will have to pay the price. That was the spike in oil, about $1.50 to over $89.50. A little bit later, probably about a half hour later, we got to move lower in the futures and to move a little bit higher in oil. Trump said he was preparing strikes. Israel also saying they were preparing strikes on Iran.
Iran will have to pay the price, and the rest of the world will have to pay the price in the form of higher gasoline prices. So we all pay the price to a certain extent here. Oil, Joel, give us a technical USO we might as well look at here. I mean, we've been leaking. We're not up that much here. Kind of looks like it wants to roll over here. Is there hope for the oil bears and obviously the stock market bulls?
Yes, there is. And let me, since I always throw a wet blanket on the market, and I've called probably 47 of the last two tops in the market. I would say this price, if I'm just looking at this oil chart here, this USO chart, I'm saying, hey, we're off the high. We're way off the high. So, maybe there's some hope here. I said tongue in cheek on the pre-market show that, well, maybe no one will be able to afford to buy gasoline, right? Because of the economy and everything going in the tank. But you lost the 50-day moving average here. You're trading up on this a little bit. So for you USO traders, you're at 133.46. You lost the 50. So you got to look at that as resistance right now. Now the 200's way down here at 92.23. But what we've talked about is we don't know how high it's going to go or if it's going to come crashing down. If things are ever resolved, it's like, where is it going to stabilize? And it's going to stabilize, I think, at a much higher price than it was before.
I mean, that's what. And Brentster, you want to say something?
No, go for it. Go for it.
I mean, I'm with you here. Like, I don't think oil's coming down anytime soon to where we were prior to the war. I'm not even sure it comes crashing down when we get a deal. Well, it'll come down. Like, we announced an official deal, which, it's been now the official count, I believe, is 38 times that Trump has said on 38 separate occasions that we have a deal. So how do we know the deal is real? Maybe we'll have to physically see it. I mean, obviously, prior to this, when the president says we got a deal, we usually have a deal. When he said 38 times, I don't know if the market's going to even believe when we get a real deal here. So, but we get a deal. I just think the world has changed to a certain extent here. The Middle East has changed to a certain extent here. I mean, Iran is not going away here. They're not going to just let the strait, just pass and, take all their billions of dollars in damage and say, oh, yeah, we'll just pack up and go home. I just think it hasn't changed. So I think we do have elevated oil for the foreseeable future. And we talked about this 3 months ago. I said, if oil stays elevated, eventually the economy is going to feel it here. They have. Like, we've seen certain stocks not performing well and going down here as of late, but it's been the AI stocks that have hidden all of that damage where, you've seen a lot of stocks, weaker. We went through, retail stocks. XRT has not done great. Obviously, there's been some other stocks that we've talked about as well, sensitive a little bit more to oil prices. The airlines, haven't done fantastic. They haven't done bad either, like a Delta and stuff has held up really well considering. But, I mean, it's been about AI. This entire last 2 months has been about the rally in AI stocks. Those are the ones that are getting hit the hardest here again today. Micron down another 40 points here. SanDisk, awful day yesterday because it goes all the way up. KISS is up over 1,800 just to sucker everyone in. Yes, it was a sucker's rally yesterday. Yes, if you bought yesterday, sorry, you are the sucker because it was definitely a sucker's rally. KISS up over 1,800. Next day, we're 1588 here this morning. So it's a significant sell-off too. NVIDIA has been leaking here. Apple's a mess since their conference, which we talked about that as well. There's not a lot of happiness in tech land, but we know what lurks beneath us. And it's not, the fear. It's the fear of missing out from all those money managers that have too much cash invested. So, Joel, let's go to the S&Ps. Is there a point here in time? Now, maybe you're the wrong person to ask because Joel's super bearish. But I mean, is there a point in time where all those money managers sitting in cash here might start to look at some of these tech names. Maybe look at the Qs even, because the Qs quietly, if we're just looking from top, 748 down to 697. I mean, we're talking about 7-8% pullback in 4 days here. It's a dip. You think they're buying?
Maybe they're waiting for the 50-day. I mean,
where would that bring us in?
717.
On SPY, yeah, on SPY. Go to the Qs.
Oh, SPY. I'm sorry. I thought I had the
Qs.
I thought I had
it's
the
good.
Qs
It's
up
good.
there.
We want to do both. Where's the Qs going to bring us in?
673.
I mean, maybe this is it. Maybe the moving averages, which I've poo-pooed my entire trading career, maybe they do come into play here in momentum stocks. And, maybe you can talk me into, having, this market, which has been very overbought, at least pull back to the 50-day. Like, that would be considered a pullback here. Like, do I think we're giving it all back and the AI rally is over? No, I was on DW News yesterday and I was like, I don't think it's over. I think we're still in the early innings of AI. I think there's going to be a lot of AI stocks. And the main thing that I pointed out on DW News yesterday was, people always want to compare, this is just like 1999. It's not like 1999 for one main reason. 1999 was driven by valuation. It was driven by hopes and dreams that these internet companies were going to change the world. You had a website, you were worth $1 billion. It's kind of where 1999 was. Obviously, NASDAQ went to 5,100, then crashed 81% by 2002. It was a cascading crashes. It wasn't just like one day. It was cascading over the course of 2 years. But from top to bottom, NASDAQ was down 81%. The Qs down 81% from the highs. That's incredible when you think about that fall. I mean, what would happen today if we had an 81% fall? It'd be insane. But there's a big difference between now and 1999. Right now, we've been driven by earnings, like real money, like companies making more money, like Micron just printing money, like SanDisk just printing money, Dell Technologies just printing money. NVIDIA has always just been printing money. We're not talking about companies that are trading 80, 90, 100 times earnings. We're talking about companies like Micron trading 9 times earnings. Yes, the business is cyclical, but if AI is really going to continue to advance like we think it is, that cycle might last a lot longer than it has in the past. NVIDIA, 20 times earnings. Even Dell after this incredible run, not trading with crazy valuations. You can go find them, and the bears will go find them and look at the Palantirs that were trading 100 times earnings. They'll talk about SpaceX, trading 100 times sales, and they'll say, well, it's a big bubble. But it's not a bubble for everything here, and that's why I don't think we're crashing and burning like we did in 1999.
Okay, you go 99, and you're talking fundamentals here, Dennis, and you're a CFA. I very much respect that. The price action from yesterday reminds me of 2008. It really does.
Well, that's even worse because the entire market went down 60. I think the number was 61% for the S&P from top to bottom. So we have had serious, not corrections, not, like bear markets, serious crashes in the past. Why? What? Okay, so you're just undoing everything I just said because I do not believe. I'm completely on the opposite.
I'm not saying
I'm not selling any of my long-term
your fundamentals.
stocks.
Well, the fundamentals. I mean, we had a structural problem in 2008 with the banks and the mortgages and the house.
We still have that problem, by the way.
Okay,
we didn't fix that problem. We just printed money to get rid of it.
Okay. And I'm not undoing anything that you said there. You're right that these companies are making money. It's a whole different thing than the companies that are at top. The only thing I was referring to was that 150-point rally yesterday off the low. I mean, as much as you're looking at this market going down and saying, oh, it's, that's, and I don't know if the numbers were different back in 2008, but I can remember that kind of price action. So, you're asking where the money managers are stepping in. I don't know. For me right now, it is easier to define resistance than it is support. Right now, that's my feeling in the market. I'm looking at the triple Qs here. Yeah, you can go in at the 50-day. That could be your target. I'm going to reload there. I just look below the 50-day. You have a lot of daily lows that separate each other. Then you got the 200 way down there at 60. I have no idea. But when you come down and you break something like it's going to bounce. It will probably bounce there the first time. But, if we lose the 50, then you have to start about the 200 day. I just that 150-point rally yesterday just man, oh man, oh man, what changed so much in the fundamentals of the market yesterday? For us to even be that low in the rally that much. So I'm just basing it not on the earnings and everything. I'm just basing it on the gut in that price action from yesterday. The volatility is going to have to come down before we start going up.
When the
So
volatility just started going up, like it's not like we have all of
that's
a
true,
sudden.
Vic.
This is a fairly sudden sell-off here. Like we've been steady as she goes for 2 straight months. Just blindly buying everything has just worked. I mean, Blind Squirrel has won. I said this like a week and a half ago. I mean, the blind squirrels have won so many nuts here, they don't even know where to put them anymore. The nuts, remember the squirrel was coming up on my doorstep, and like burying a nut in my pot, like in a potted plant. So, I mean, this is how many nuts the blind squirrels have. What do we mean by that? It's just like blindly buying anything. Everyone is a genius in a bull market. That is absolutely true. Everything goes up. Like you can just be buying anything and you're just going up. Stocks are just going up. It's kind of been the way. I mean, there's been a few stocks that haven't. But we just got started. We just started 5 days ago here. Have we broken the bulls? The bears are definitely out of hibernation. Have we broken the bull thesis, though? You're saying, no, maybe yes?
I mean, we're not even at last month's low.
No.
What's the big deal? We haven't even taken out the May low. I mean, this, once we, if we break a monthly low, then, it's something to get worried about. Just, look at your, wow, we are still so far from, that's on the monthly 50-day moving average. But, use use your 50-day moving average averages, use your double bottoms, and, use those as potential support. And play the bounces. And long term, I mean, you have a level now. Now, can we find a level of support and have a meaningful retreat, kickback? And we also have macro. Brent, I'll let you go on the macro here because
it's good. This has been an awesome conversation, and you can see where the guys' focus is. Obviously, we started this conversation talking about escalation in the Middle East and macro, and it rolls into a conversation about how the markets are trading. That's where the focus is. But circling back to the macro for just one sec, I want to make sure people are aware of a really good point that one of our awesome STN think tankers made, Perry Mason. He said, like, as we were getting those escalation headlines this morning, Perry Mason was like, keep in mind, guys, the World Cup starts tomorrow. And as we've been heading into weekends when we were thinking there could be escalation and there was a global event like the Olympics, like the World Cup, we've just been a little less hesitant to think that maybe Trump will do something or Israel will do something or Iran will do something when there's these global events happening. I don't know, it remains to be seen. I think a good point to mention, though.
Maybe he's trying to get it in here right now before the World Cup starts. What's the start tomorrow?
I think it starts tomorrow, yeah.
Or maybe he's going to come in here, and it looks like there's some escalation here overnight. Maybe he's trying to get it in there before, but tweeting stuff like they will have to pay the price. I don't know if this is imminent. He's going to wait to pay the price. Trump is not a patient person, so I highly doubt he's going to wait till after the World Cup. And I'll be honest, I don't know if he cares. Like he might just do it during the World Cup. I'm not sure he cares that much, that to do in the World Cup or not. But it's a good point here.
Yeah,
this is. I mean, the one thing about this president is he's very transparent. He's speaking his mind all the time on Truth Social. He's telling you that they will have to pay the price. He's telling you there's going to be escalation. The market is pricing in increased escalation here. So if we're calling the president's bluff, I think that's been the wrong thing to do. Yeah, no, it's saying the deal and gets excited, yeah, for sure. But when he's saying pay the price, I don't think he's bluffing. I think there will be an attack, a serious attack on Iran here, and the market will sell off on that. So it's hard to just come in here and buy the dip, knowing that we have escalated here now to a level where the president is truthing out an hour ago, Iran will have to pay the price. Sounds scary to me if I'm long stocks, and that's why we're selling off. Okay. Enough war talk. Individual stock news here, Brentster. It's not a lot. We're not in earnings season. We're going to get Oracle tonight. We can preview that in a little bit. But one stock that did break news last night, you were all over this, SMCI. Shelf and then the offering. This was a clean setup. Pitches up the middle again for the shorts here. I know there's a lot of people in the think tank, or at least a few people, I think it was Phil and a few other ones that took the trade. But so SMCI comes out. What you can do the timeline if you want, Brentster.
Sure. Yeah. SMCI comes out at 4:24 p.m. last night with a Form S3 ASR. That is a shelf filing. We click into the filing, we see they have common stock. That's why we care if you are in the equity markets, you want or don't want to see common stock. That means there could be dilution. There will be dilution. You also want to look for that word shelf. And what happens with a shelf? Well, companies are registering an offering that could be authorized, that could be activated. They don't have to authorize the shelf. They don't have to do an offering related to the shelf. But as you're saying, Dennis, the setup was clean here. SMCI does a shelf, and then about 50 minutes later, in a press release, they announce a proposed $7 billion equity and equity-linked financing transaction, and they say that it will fund AI orders. Shares of SMCI trading down more than 10% here this morning on this.
Big offering, not a little one, a big one here, because you're talking about a $24 billion company doing a $7 billion shelf. That's like literally 25% of the market cap. So it's a huge shelf. The setup was clean last night because we always break this down. You know, you'll see shelves come from like major companies, like S&Ps, that they just do it. A lot of times they just have debt in them, some of the major ones that aren't in cash burn situations. But when you see one from SMCI, my comments last night were like, this is likely going to do an offering. SMCI is a company that is probably going to do an offering when they do a shelf. It sat there for 30 minutes at $40, could have traded it all you want. And then the shelf came, or then the actual offering came out, and then they tanked it to $4.50 afterwards. So, I mean, this was very, very clean pitch up the middle to be short SMCI. I know there's a bunch of traders that had it on. So, I mean, this was just reading the headline and saying, anticipating that likely going to have an offering here, likely tonight, because when companies like this that are struggling, and SMCI shouldn't be struggling because we can see competitor Dell, but SMCI has done so many things, so many missteps by management here, that they're the kind of company that needs to raise $7 billion when we're in an AI bubble. That is unbelievable, really, that they aren't printing money right here, right now, like Dell. So they've done a lot of things wrong. Raising the money. I mean, this stock seems like it's always guilty until proven innocent.
A couple important points there. Number one is when you see the shelf, it doesn't automatically mean that they're going to do something immediate. It means they have the go ahead, the green light. Another thing that I look at when you see this kind of activity is, what has the stock done lately? And the stock is not a bad time. I mean, what a run this has had, from $20 to over $50. I mean, of course, it had a bad day yesterday. And just like, even with the price action yesterday, I mean, they weren't, they still wanted to do it. Even with the appreciation, it would have been a little bit, if they did it when it was at 50 or whatever. But big. That's I don't know if I've ever seen a percentage like that.
When they're that big, like usually you see an offering that's 2-3% of the market cap. When you're talking one that's $7 billion on a $24 billion company, I mean, it's approaching 30% of the market cap. There's serious dilution going to happen here. So, I mean, this is just a company, again, that just continues to misstep. I mean, you want to own best of breed. It's been Dell. Like, people were asking me before, like last year, they're like, why, if you own all this Dell, why not own some SMCI too? And I'm like, because I want to own best of breed. I want to own companies that are firing on all cylinders. I mean, that's really, from an investing standpoint, you always want to own best of breed, because look, Dow, SMCI, similar businesses here. One's completely, not even, the accounting isn't even being trusted here at this point in time. So, and SMCI has really gone nowhere. If we look at where SMCI has gone in the last year and a half, we've gone nowhere. Dell has tripled really in the last, 3 months, 4 months has been all the move. But this is just an example of own best of breed.
All right. We did just have Blue check in the background. I said hello to him, but he pieced out for a sec. I think he was just adjusting something on his broadcast
Yeah.
setup. We are going to get CPI in about 4.5 minutes here. We had somebody in the chat who was just asking, where can I see CPI live? You can see it right here. We're going to break the news live, and better yet, something that I doubt you're going to get anywhere else. Our chief economist, Blue Putnam, will be coming on right after the data point to give us his initial thoughts. So let's preview those numbers now here. This is going to be our May reading for CPI. May reading, the base reading is expected up 0.5%, 0.5% on a month-over-month basis. The core CPI reading, Carmen, which she asked a great question in the chat just a minute ago. She said, is oil not in the CPI reading? That's where the core number comes in. The core number excludes energy and food prices. Both of those can be very volatile. So you can choose which number you want to look to. You can look to the base number, or you can look to the core number. The core reading, month over month, we're expecting up 0.3% year over year. We're expecting the base reading up 4.2% and the core reading up 2.9%. We have about 3.5 minutes here until we'll get this data point.
It's a market that is not a silver lining market here right now. So you want to be somewhat careful here. It doesn't mean that it can't go up on this data point, but it does mean that this market's a little more nervous than it was, a week and a half ago here, where they were finding the silver lining in all these numbers. Sentiment matters. Sentiment right now is the market is a little bit spooked. So as we come in here, we get a wishy-washy number. They might err on the side of sell. Now, again, remember too, we're in a little bit of the sell the rip market too. So if we get, a number that's a little bit light and we get a nice rip here, there may be more of an opportunity to sell some of those tech names. Like the interest rate sensitive names actually haven't been doing that bad. I mean, really, when we give perspective here, this has been a tech sell-off here. Like if we look at the IWM even itself, which is very interest rate sensitive, we're right near all-time highs. I mean, the IWM is like 2 or 3% off all-time highs. You can't even see the sell-off there. So it's, those are the names. IWM is always the most sensitive to CPI data. So keep that in mind. But if you start seeing like a light number and all your tech stocks rally, those might actually be the ones to sell on the rip, maybe not so much the IWM. 2 minutes here. Blue's going to come in. We're going to bring him obviously live in with the number here as well. Just continuing on from, we try to get one more stock in from last night. Sure. There's a lot of good ones last night here. We've got, SpaceX preview. We've got a lot of other things. We've got Oracle preview. We've got Adobe preview here. But, we had some ratings last night too, so BRT caught a buy rating. There's a few other stocks that were trading, up on ratings. And I'm like, I just wanted to lay it out. I'm like, this is not the market to be chasing stocks on buy ratings here. Why? Because once you have elevated risk, the ratings won't matter in the morning. Like I saw VRT popping up $2 because I don't even remember who was giving the buy rating. I'm like, I'm not chasing that. I'm like, there's no point to chasing that because if we're down significantly this morning, they'll forget all about the rating. That is exactly what has happened. VRT is down 3% here now. So those people who were paying up 1% for the stock last night because it caught a buy rating are not following the macro environment. Ratings work well, very well, and when you have like lower VIX, when you have like normalized markets. When VIX starts to get elevated and there's fear in there, ratings don't matter much at all. Unless they're sell ratings, then they really matter.
Yeah, they do matter. And the same thing for earnings environments, right? There's you talk about a run up in stocks ahead of their earnings, and automatically based on the market conditions. Oracle, going, boy, I looked at that chart, man. This Oracle and the Microsoft, holy mackerel. And that's what led the market up to the all-time highs, were the underperformers. But anyways, let's just go to the 1 minute chart here. I'm not going to get, this is for the Brandster. We got a lot of green candles here. We'll note that oil, I know Blue's coming on here in a minute, but he said this might be the peak number for the year. So we'll see. We're going to get a 4 handle on this one, folks. How much into the 4 handle? I'm leaning on you, Blue. He said he's looking for a 4 handle on here. So we'll see what the reaction is. First up on the on the upside here, we are 30 handles off that pre-market low. We are approaching
moving higher, moving higher. Market's moving higher.
Now it's not what I'm seeing.
Standing by for
a
data.
drop and a pop.
IWM's green.
I don't have the data yet. Standing by for the data. We are up a good
It's
couple
going to be
dollars
light,
here.
maybe
on SPY.
3.999 or something.
We have inline month-over-month reading for the base. That's 0.5. We have the core reading year-over-year 2.9%. That was in line. Everything's in line here except for the core CPI reading down up 0.2%. That's a little lighter than expected. Economists were looking for up 0.3%. We popped on futures to, I see, almost 73.70. Now we're back toward the 73.50 level. Quick thoughts, guys, on the reaction here?
If you squint really hard, you'll see that pop, and its pop was sold so fast, I'm not even any humans were going to be able to sell that. IWM actually did go scratch here. It's a good number. It's light. We're going to bring Blue in to analyze it live here. I would say initial reaction is good. We're off the lows. The party, kind of continues, but we've got nervous Nellies in the overall market here. So I'm not sure, we're going to get follow through, but, wait to see. The number so far, it was a good number. We bring Blue in to analyze it?
Yep, let's do it. Here we go.
Blue Putnam, Chief Economist for the Stock Trader Network, joining us here 1 minute after the CPI data. Blue, how you doing today?
I'm doing well, and the CPI is doing okay. That's that was a little bit light, and that's a really good thing. I mean, gasoline prices appear to have peaked. Oil prices, well, I wouldn't call them stable, but they're not going into the hundreds anymore. So we've probably seen the worst of the worst, or we'll see it either this month or next month.
So that's good news.
Yeah, it's very good news. We didn't really. The last time we had the inflation surge was the pandemic, and there was so much fiscal and monetary stimulus. There's none of that this time. But what I really see happening is the situation in the Middle East. The world markets are figuring out how to cope with it. I mean, I've been telling people every day that the Strait of Hormuz is closed. It gets worse, but it doesn't get worse anymore. I got to back off that one, because we do appear to have figured out kind of how to deal with higher gas prices, higher jet fuel, higher diesel. And we've hit a point of relative stability. It's not great, but it doesn't seem to be getting worse.
Right. I mean, that was one thing that I noticed in the oil is that, we are way off the highs, right? From when the war broke out. So, I mean, that's good news, right? At least for the short term. What about some of the other components? I don't know if you had a chance to break everything down, but looking at some of the other components, anything stand out to you?
No, nothing too particular stands out, but what we are seeing is a little bit of the gas price rise that was a couple of months ago is now feeding very, very slowly into some other goods and services. But really, the month-over-month number tells you it's pretty moderate.
All right, let's bring some of your data to the stage here, and we can run through that real quickly. Blue. There's your headline inflation. I mean, we've seen the peaks. Looking at over a longer term perspective, this is the data through April of 2026, moving up a little bit. Moving on here, same thing. There's your latest data. You talked about the gasoline here. I mean, it's gone up, but I mean, it's not the $5 gasoline that everyone was worried about.
Yeah, it's really stopped going up. The last couple of weeks, this is the national average for regular, but $4.30, and it's even drifting down a penny or two from there. So, the worst is over for gasoline. The worst is over for diesel. In fact, a lot of the refined products are definitely stabilizing, and oil, is also stabilized. So this is really good news, that it's not going to be the disaster some of us thought it would be if it lasted, kept lasting another month or another month, so on. The coping,
good point coming here from Carmen. So we reserves, right? Didn't we release a lot of reserves here? Maybe that's keeping things steady on the gas. And what happens? What happens? Start to get low on the reserves, or they actually run out.
Well, they are getting lower on reserves. We're getting lower on inventories. But one of the big things that happened is China dramatically reduced its demand for oil imports. They have, of course, plenty of reserves, more than we probably know, and they may be getting some oil from some other places like Russia that we're not talking about as much. But China really helped stabilize this market. The other thing is that countries are figuring out how to get their oil out of there, out of the Middle East. Saudi Arabia is now sending 6-7 million barrels a day through the pipeline to the Red Sea. So that we've made up some part of it. And then on the demand side, where airlines have cut some flights, you can see some changes in behavior on driving patterns and so forth. So that's what I mean. We've had both supply and demand adjustments, and all I'm really saying is the worst is over, and not that it's great.
Okay.
What happens, Blue? Well, you can go into here, but what happens if we do stay elevated, not just like through the end of the year, but let's say like we stay elevated for, the foreseeable future, like, into next year, like oil prices stay up here and gas prices don't come down at the pumps here. Does the consumer eventually get strapped? Like, how long can the consumer, or the consumers just, this is an AI economy now, we don't need gas anymore? Blue, thoughts on, how much pressure this does put on the consumer?
Well, it certainly puts a lot of pressure on the consumer. The initial reaction to higher gas prices and the surge in inflation was that I'm going to keep buying what I have to, and I'll take it out of my savings. And we saw that in the data for March, and we're probably going to see it in April. But then you start to adjust, and we're already seeing that too with the Targets and the Walmarts are telling us that people are kind of moving down the grid on shopping. We know that people aren't eating out quite as much on particularly the basic end of the fast food ends and so forth. So people are making an adjustment, and they just make that adjustment and start to get used to it. By the way, you're looking at the oil futures chart here, and the black line at the top is where we are. And what it says is if we go back, if this thing just keeps going, we're going down into the 70s for the oil price, a year out or so, but we're not going back to the 60s where we were. So that's kind of what happens is the spot price can go from 90 to 85 and maybe down to 80, but we're going to stay elevated for quite a while. But we're not getting more elevated. That's really the
Okay. I
point
mean,
here.
especially with the news that they did, they came out today. You expect a bigger spike than you have, and actually the USO has already pulling back off its highs here. Blue, I mean, you're giving us hope here, right? You're saying
Yeah.
we've seen the peak. All right, so let's flip the coin here, and jobs and unemployment, a very important thing. We got our number. That's kind of holding in here too. Talk about the unemployment, and we could get into the implications for interest rates.
Yeah, the unemployment stayed steady at 4.3, and then the payrolls were the one that really surprised people. It surprised me. Typically, when you have a big bounce up, you'll get in the next month or two, you'll get a bounce down. That did not happen. We've had 3 good months now. So that's enough to convince me. And I'm kind of mad at myself. One of the big things that we saw last year was we lost a couple 100,000 of federal workers. And we know that's not happening anymore. And, that has knock-on effects, because if those folks aren't going to work in those buildings, then, they're not shopping for lunch, they're not going, all those kind of add-on things. So, one of the big drags last year was definitely federal employment being cut, and that is not a drag this year. So we're coming back there. The industry that's still losing jobs is finance. And that's the AI industry that's getting hit first. In terms of jobs, the software stocks are getting hit in terms of their stock price, but we got good job growth across the spectrum this time around. So it's not just healthcare workers. So it's good news. By the way, this is the answer to Dennis's question. This is personal consumption month over month. Now, the last data we got was April, but we had that spike in consumption, and that was just to pay the extra cost while we figured out what to do. Now we're figuring out how to adjust to this, and that's the resilience of the economy. We figure things out and move on.
Right. The preferred number, right, of the Fed, right? We'll get that information at the end of the month. So the consumer, they're out there, right? They're still spending, not really having paid that much as we thought for oil. All right, Blue, let's talk about Mr. Warshier stepping in, and boy, oh boy, he's kind of coming in at a tough situation. Talk about your outlook for interest rates here for the remainder of the year.
Well, they're on hold, but, I think Warsh got a break here. On Friday, when the employment number surprised us to the upside, a lot of analysts coming out and say, well, this is terrible news for Wash. President Trump wants the rates down. Warsh won't be able to get them down. Nobody's going to be able to, no new chairman can convince the whole FOMC it's time to lower rates in this environment. But I think the opposite of view I have is it buys him time to kind of become a little more collegial. He doesn't have to go in with the pressure to lower rates. He's got a couple of months to see how the data goes. So I think the Fed meeting goes much better than I would have thought, say, a month ago on his first meeting. But I do see, less forward guidance. He wants to keep his options open. I would suspect that the statement changes and we have a balanced risk. And that's just because the FOMC members want that. And he can give them that for this month and then, talk about it in August or September, whether, a case can eventually be made for lower rates. I think it'll be a hard case. So I'm not expecting rates to go down. But it's a better environment for Warsh. It's not as hard as he thought it might be.
Is presidential pressure going to influence, you think, or is this the Fed is still its independent organization here? Because we know when he doesn't lower rates immediately, when he doesn't lower rates in August or September, that Trump's going to get on the horn and say, hey, this guy's an idiot too, because he likes to call people idiots. Do you think if there's any signs, I'm basically asking, is there a chance we could get rates lowered in December?
Oh, there's always a chance, but it's not a good one. If the economy remains resilient and the unemployment is, 4.3, 4.5, in that territory, you're not going to worry about that. And then you're going to be more worried about inflation if you're not worried about jobs. So if you're worried about inflation, it's hard to lower rates. And what's really at stake here is the independence, not just of the Federal Reserve, but inside the Fed, you have the independence of the regional banks. And that's just absolutely critical. You have the Federal Reserve Bank of New York, which is a permanent vote on the FOMC. You have the other 4 votes rotate at the regional banks, but every one of the regional banks presidents are in the FOMC meeting. They all get heard. It's very collegial. And they are all over the map on rates, which is why the balanced risks are coming. So Warsh can't outvote these folks until he builds a following, and it takes a while. So I'm going to go on rates hold this year, but I'm going to lower them for next year.
Yeah, I was just going to ask you about the current makeup of the Fed. Just a strong leader, and with Powell dissension. So basically, a balanced Fed is good for the markets.
I think it is. I mean, a Fed on hold is not a bad thing at all. If inflation is running, say, at 3%, but not 2%, and not going up any, much higher, then, keeping the Fed funds rate where it is, a little bit below 4%, is just fine. So Fed on hold is not a problem for me. I do think they will start some quantitative tightening. That is, they'll let some more of their assets run off, but very slowly, and that'll probably start in August or somewhere. But that's not a big deal if they're just letting a couple of billion of maturing debt roll off and they don't sell anything. So I'm not too worried about that. Forward guidance is no big deal. Their guidance past one meeting is never very good anyway. So that's, I think Warsh has got some time to adjust and figure out how he wants to run the Fed. And then, as Dennis says, the midterms hit and the pressure comes on.
Okay. Blue Putnam, chief economist here at the Stock Trader Network, breaking down the CPI numbers, giving us a sliver of hope. Blue, before we let you go, the old blue recession indicator probably ticks down a little bit after this number.
Yeah, the Friday number on jobs tipped it down. When I went into the number, the breadth of the rise in jobs was really good. And then, I'm just coming to the conclusion we're adapting to the current situation, and that's the resilience theme. So, resilience is a good thing.
Okay, thank you, Blue. We'll be talking to you, of course, next Wednesday. Nice recovery here in the stock index futures here. We have regained back half of those losses so far, trying to get back green on the session. Just noting the closing price in S&P's 92.75. Your pre-market high right there at 93. So inching our way back to unchanged. Always like to look at the CME Fed Watch tool, see what that is indicating for interest rates. And what do we have, Brentster?
So let's click to like October. Let's see what's going on with October here. This is our October 28th, 2026 Fed meeting. We are currently at this one here, 350 to 375. So you can kind of see, I don't know how these adjusted, but let's just look at the overall picture here. In October, the odds that we have higher interest rates are sitting around 50%. Let's click to,
which is crazy because, imagine if Warsh comes in and actually raises rates. Trump will lose it, go nuts. So, I mean, it's crazy that they're giving, a 30% to raise rates. I mean,
reality.
We're hoping for lower.
Where we're at.
You're going to get raised. Like here you are, 42% to go up a quarter by the end of the year.
Yeah, and like you gotta add these other parts of the tail in here too. So it's not just, yes, it is a quarter, but the odds that we go up a half point, we're like at 60%. So, and then again, this was for December. Let's click to January just to take a little gander here. The odds that rates are higher in January are sitting at, quick math, I mean, we're over 70% here. So at least for this current market, at least for these current Fed fund futures bettors, they are saying that, to answer your question that you asked, Blue, could we get a lower interest rate in December? Fed fund futures do not think that.
Wow, great data there. We'll see how it plays out. The never-ending earnings season. Big one tonight. We are going to talk none other than Oracle. And Oracle had its run. Boy, oh boy, over 240, 250. Here we are, traded down $3. Oracle, that is the highlight. Also, Chewy after the close today.
Chewy this morning.
Chewy this morning? Okay.
Chewy already reported. Chewy reported, and we can just dive into it here just a few minutes ago, actually. It's 7 o'clock. They beat estimates. Revenue grew. The stock got a little pop here. They top actually 19 cents. It was a big beat for the dog food. Do you use Chewy,
Yeah.
Joel? We were trying to ask that.
Yeah, we do.
Joel gives Chewy. So you got the inside scoop. So you let me know when you stop buying dog food, and then we can go short. But people are already shorting the rips here. I mean, when you're in a tough tape like this, you see a ripper going from 20, like the algos didn't get the memo with 2040. What did it get? Over $22 this morning?
22.20.
This is not the market to chase up stocks in. This is not the market for this. So already gone. See ya. Buy the rippers. Punish. Buy the rip hardly works in any markets. Definitely doesn't work in this market. It's the worst strategy right now. Sell the rip, killing it. So blindly selling the rip, winning money here.
Well, the bulls are trying to defend 20, but it's just sitting there right now. So if they were at 20 the last couple days, the recent low of the move, this really has not, stock just has not been participating. If you're looking for more on the downside here, we had a pair of lows. Actually, a trio of lows coming in at the 1950 area. So there is the actual low of the move coming in at 1930. Let's go to Oracle here. What a pullback here. Time above that 50-day and now back at the $200 level. Might not be such a bad day to report, huh, Dennis? I mean, this market starts to climb back, so we can maybe negate that.
Yeah, we don't
factor.
know. We don't know where we're going to
no.
be. There is absolutely nobody who knows where we're going to be at 4 o'clock today. So we've bounced, recapping, sold off significantly overnight on worries of escalation. Remember, he is still going to be escalation here. He's already said that. So I think this CPI rally that we've got, I don't know if it's going to hold. This could be another opportunity to sell the rip here. S&Ps are not believing it as much. We said the IWM would probably be stronger, which it absolutely is. Qs are still not really participating that much either. So you have the small caps, the interest rate sensitive stuff definitely participating this morning. Maybe we have a little bit of repeat yesterday. We kind of saw those stocks stronger yesterday as well. But, previewing Oracle here, expected move 28 points. That's
huge.
a big one. Yeah, it's big
to
because you know
double-check,
what?
yeah.
We don't know where the commentary is going. Where is the spending? Are they seeing, any results from their previous round of spending here? Like, how are the numbers? What do they look like? I mean, so there's a lot of unknowns here. Obviously, sentiment really turned with software back in April. Oracle went from 140 to 240. Well, we're back down. We're not at 50% retracement of where we were. But, is there underneath demand for a stock like this? All those questions to be answered tonight. This is going to obviously affect other software names as well. Like Microsoft probably gets affected in here. Other ones have been moving here. So watch your IGV off Oracle tonight. We'll be obviously trading in the Think Tank Live here. I still own a little bit of Oracle in the long-term portfolio, which I'm wishy-washy on. It's like a half-size position. Had it just been in there for a while.
And remember, intern, thank you for the really good point. You just hinted at it there, Dennis, but just to say it deliberately, remember, really, chat, tell me if I'm wrong. Oracle started this whole like CapEx focus thing.
Oh, yeah.
Right?
Yeah.
So Dennis, you said, are there going to be other names in the group that move on Oracle? Absolutely. Are there going to be CapEx names that move on Oracle? Like, do we have a Oracle CapEx watch list from whenever this started 6 months ago? I don't have one. We can make one though.
We should get that list going. Do we have one? We should have one.
We should have one.
Yeah. I mean, it's not like, like a CapEx for like, the like Oracle's not the be all end all here. So, obviously when we know Google's, spending more, you got Broadcom, AVGO that goes right away. Have Sienna that goes right away here. I'm not sure Oracle has. If they do, please let us know here, chat. I'm not sure we have any direct beneficiaries to the Oracle CapEx spend. I'm sure there's some smaller companies in there, but, it's a great point.
If you thought you missed the major low in Oracle, you're getting a pullback here to almost to the 50% retracement at 192. What's very interesting to me is that expected move. I mean, let's say it closes at 200 today. I mean, 170. I just I feel that that's a big expected move for this stock today.
It does seem big, 28 points.
Doesn't it?
It
yeah,
seems too big.
And I just think, man, if you see 230, I mean, I think people are gonna be like, "Thank you."
Yeah,
that is a gift from the market gods.
Yeah,
and I'm assuming you close at 200, and I think if you get 170, the shorts are going to be going, "Thank you, market gods, for this." For me to, I mean, that's a big run. Some people had to be caught in that. So, man, the parameters I mean, yesterday's high is 220. I mean, how many people would like
it seems too large.
Yeah.
Unless they say something crazy, I'd be fading that straddle.
Yeah. Yep.
Gabe Fade pointing out Nebius and CoreWeave linked to Oracle. Yes. I am unsure, though, if that was just because those names, when Oracle first announced the huge CapEx spend, I just wonder if it was just because those names were like coming to some kind of trendiness anyway. But I think that's a good call, Gabe, to get us started.
All right. All right, we will. Well, you got a trio of highs here in your core weave, but yep. So we'll move on. What about Adobe?
Adobe
Thursday,
on
Adobe with
Thursday afternoon.
Lennar. I mean, I don't think
Yeah.
anybody expects anything great from Adobe here. The stock is near 52-week lows. It didn't participate really at all in the SaaS rally, even though it fully
Very good.
participated in the SaaS apocalypse. I think Adobe is a mess. I think this is a stock I definitely don't want to be in. Could it dead cat bounce? Could the earnings be fine? Yeah, but I think there's happy sellers if the thing rallies here. So this obviously Thursday night, so we can cover it again tomorrow. But I don't see I just don't see a turnaround story here. I'm sorry.
Yeah, that's okay. You don't have to.
Expect to move
Expect to
24
move
points. Spencer's
24
all over it.
Yeah,
Okay, nice. Thank you.
no
Yeah.
problem. Anything sticking out to you on the chart, Joel, or you pass?
Man, it did get a bounce. The only thing that really stuck out to me, and it's not going to do you any good right now, is you did get a gap fill here. And a lot of times when you get a gap fill in the price, after that kind of decline, that's the word, that was the trade for the people. But now, I mean, it's just still so close to the low of the move, trading down another $3. The low of the move comes in at 224.13. So once again, the expected move, let's say we close right here, takes it below the low of the move. So let's see if
Can we look
Adobe.
under the hood, Joel?
Yes,
Can
we
we look
can.
under the hood here? We do this on the STN think tank all the time. We don't do it all the time in pre-market prep, but I mean, just looking under the hood, kind of getting a feel for where the money is rotating today. So we got a list of about 150 stocks here. Joel's going to bring up the list here and show you. You can see there's still a lot of green on the
There
screen.
is.
That green, yeah, and the green is very much concentrated defensive stocks. Staples are up here. The drugs are up here, which is typical, on a down day. Utilities are trading higher here as well. Oil stocks are trading higher, obviously, with the escalations there. But, there's some sneaky ones coming in here, too. Like DKNG, maybe that's a World Cup trade. That's trading up here. Netflix has been moving counter to the market for a while. The banks are holding on very well. Apple playing a little bit defensive posture this morning, even though it's been rocked since their conference there. So you can see, like we're not all just bloody mess here today. IWM has ticked green a couple times here this morning. So some stocks want to go up. And when you have a light CPI print, think about the stocks that are interest rate sensitive.
There you go.
Those are the ones
Sure.
that are likely to go higher here. So I would think about my banks. I would think even the biotechs, might hold up a little bit better here. I'm along some XBI. This is, kind of where I'm sitting. Just, when I'm looking at it here is, this is how I kind of approach my mornings typically. I look, what's really moving. And tech is still kind of a little bit of a mess here this morning. Again, interest rate sensitive. Tech is not interest rate sensitive. They don't really care that much. It's about the AI theme. So is, a light CPI going to bail tech out here? I'm not so sure.
Berkshire showing a little bit of gain yesterday, up $1.24 today. Oils are responding to the higher oil prices, and then if you go to the bottom of the first column here, you get into some of your staples, and Procter and Gamble in the green, Coke in the green, Pepsi, Walmart, Target, Costco up 291, trying to rebound from that earnings thrashing. Your defense stocks, little war talk showing some gains. Moving over to the right column here, we'd like to throw some of our travel and leisure in here. Delta, UAL, your airlines trading in the red in response to the higher oil prices. Cruise lines following as well too. Now you go to your interest rate sensitive stocks, a little bit more defensive, responding to the CPI number that comes with your AT&T and your Verizon. Quick note here on Apple. Apple, just let me pull the chart down here, or the
Table.
the page down there, and Apple. Here we did come down here, and let's see, still above the 50-day. We'll see if that low from yesterday can hold up. Right now, looks like a decent level. 290 was support, and really 290 was the area was for the launch pad here up to that all-time high that Apple just made 2 days ago at 317.40. Don't want to get too optimistic here that the low of the move is in, but if you get a pop, this is a big bar, so there's going to be some scars on people. So keep an eye if you're looking right now. This seems like you're finding some pre-market resistance here at 291.50. So see if Apple can at least hold steady or get some of those losses back. All right, we got through the CPI number. We're clawing our way back. Dennis mentioned about interest rate sensitive stocks. That would be the biotech sector. So could there be a better day tomorrow than to have Laura Chico on from Wedbush Securities to discuss the biotech market and her picks and pans. So, folks, thanks for joining us here today on Pre-Market Prep, and looking forward to being with you all tomorrow morning, same time, same place.